Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it.
Hey, while the jobs report came in today and, 11% unemployment, looking pretty good. It's beating expectations. A lot of people thought it'd be a lot worse than that, and it's looking good, 11%. But is it time to celebrate? I'm not so sure. 11% is much better than we anticipated, and a lot of people, quite frankly, were thinking that it would be much, much higher than this. And last month was supposed to be closer to 20%, and it went down. And of course, this month it's looking better. So things are looking optimistic, right? Things are looking much better than anticipated. Yet still 11% is much too high to be excited about, much too high to be comforted. But there's good signs. There's good signs to be paying attention to the market. And there's reasons to be optimistic with a little bit of hesitation, not to get too far ahead of ourselves. I think that's really important. See, 11% is still the worst job market, is actually worse than the Great Recession, right? I think we had 10% roughly during the depths of the Great Recession. So 11% is still a pretty poor number. So we don't want to jump up for joy right yet, but we do have reason to be optimistic to say, hey, next month, maybe we'll get into the 9%, and maybe shortly thereafter, we'll get down to 7 and 6 and continue to get better. So there's definitely reason to be optimistic, but there's reasons also to be cautious, understanding there are some states now that are shutting back down or holding still, not allowing businesses to open back up like they had planned and anticipated. So we've got to kind of watch and pay attention to what's going on. How is this going to affect us for rental, for property apartment investors? Well, obviously there's a couple things, right? First of all, if people can't pay rent, that means you can't collect, and that's a bad thing if you own properties, right? If you own real estate, you want your tenants to pay rent, right? That's what's going to pay the bills. Without that, that's not going to pay the bills. Of course, if you're going, hey, I want some rock bottom prices, well, then you're looking at that. Now, I'm in the kind of mindset as I do own properties. I do want to see rock bottom prices, but at the same time, I never want to see anybody get hurt. So I would like to see the jobs to continue to come in. I'd like to see people to continue to pay rent, but we've got to be paying attention, keep our pulse on what's going on in the market. Now, yesterday I told you, don't pay attention to the news. I did say that, but we still have to pay attention to the news somewhat. Pay attention to the relevant news that's relevant for your business, that's relevant for what you're doing, that's relevant to move you forward and keep the wheels turning, right? Ignore the rest. And also, when we look at the news, it's funny because I saw two articles back to back. One article said that unemployment was 11.1%, I think it was, and basically they were cheering. They were saying this is great. We're seeing this change and it's positive and all good, right? And then right on like the next site, it was that we've got 4.6 million people filed unemployment last month, and the world is falling, right? Everything is going to hell. So we got one report that says jobs are coming back, unemployment's going lower, and we got another report that says, run for the hills, everything's bad. So we got to look at what's going on, look at these articles, and stop just reading headlines. It's funny when I read some of these headlines. There was a headline the other day, and it talked about, what was it? It was 50%, 50% of something, when the actual statistic is even in a good market, we only see as high as like 60%. And I wish I could remember off the top of my head what it was. Oh, that's what it was. It was the same thing with jobs. It was 50% of people don't have a job right now. Okay? Well, when you read into it, it said, well, 52% of people do have jobs, so only 48% don't. But in the best of the markets, we're typically around 60% that have jobs. So are we worse than normal? Yes. But are we as bad as what the headline said? No. It said half of all Americans aren't working. Well, that sounds scary, but we got to look at the headline, look at what's going on. So job report, 11% unemployment, reason to be optimistic, in my opinion, reason to be excited, reason to go, hey, we got to pay attention to what's going on. However, a reason to also be a little bit cautious, going, well, it's still 11%. That's really high, higher than the Great Recession. So we do have to be cautious and careful and paying attention to what's going on, really paying attention to our rental properties still, really making sure we're taking care of our tenants at this time and doing the things to be on the ball, right? To make sure we're collecting our rents, make sure we're reducing our expenses, getting ready for what could be a rocky road ahead. It's already been a little bit rocky, but I think there's been a lot of funny money put in the market, so it hasn't been as rocky as what it normally. Pay attention, see what's going on, and let's all hope together that this trend will continue, and then we'll be at like 5% unemployment in no time, right? I'll talk to you soon. If you got anything you want me to talk about, let me know. Love to talk about what is going on with you, what you would like to hear about. So just let me know, drop a note, and we'll cover it. Oh, by the way, it's not the 4th of July yet, not today, but I'm going out. I'm hanging out